Good morning, 5:51 a.m. Pacific Standard Time in the Great West. In the East, well, we know that you add 3 hours to that time. The date is 8/6/2010, and we're going to talk about the S&P futures. That fair value is down. Nonfarm payrolls for July fell 131,000, which is far worse than the decline of 87,000 that had been expected. And the thing about it is despite the larger than expected decline for the July and the downward revision to the June data, the unemployment remained at 9.5%. And right now the futures are getting a little bit of a haircut to the downside. The stock market ran in anticipation for the bulls that are in the Dow dog days of summer in August, where most people are on vacation, is that the bulls have tried to walk this market on the very anemic volume, betting that these great numbers that they had talked about on TV all morning before the number, they talked about it all week long on how great it is. I don't see anything good about it. I mean, I got to be honest with people. Americans suffer because they're not working. And for Wall Street to try to come and run these markets higher because they think that this is all great, like they always do, they'll take the negative, try to turn it into a positive and how great it is. Well, I don't see anything great about it. The lower unemployment rate is most likely the result of discouraged job seekers exiting the labor force. And we all know how high the foreclosure rate is, and people, the banks, people have been living in their homes, not paying. They have no need to pay. They have no reason to pay, but they haven't been kicked out. So that monthly mortgage payment that consumers haven't been paying, they've been spending that money back into the economy. The thing that I want people to know today, it's a Friday, they will be buying stocks off of the bottom. Okay, the key is where certain stocks have ran in anticipation and certain stocks are overbought here within this first week of August. And we have a major options expiration coming. We have a big imbalance call to put ratio. And NASDAQ futures versus the fair value are down $19.80. So when fair value is weak, that means that when stocks bounce off the bottom and go up and hit key resistances, they roll back over. We will see today if there's any high volume selling off of that wonderful number of the jobs report, 8/6/2010, 5:54 a.m.